Good morning, trader. Today's special episode, mastering covered ratio spread and profiting from top 5 US growth stocks in 2026. Let's dive into today's topic on the covered ratio spread options strategy combined with insight on select growth stocks in the USA. I will break it down step by step, including trading process for minimum profit, focusing on strategies that aim for break-even adjustment or credit-based income with limited upside, and then covered growth equity stocks with an emphasis on their strong fundamentals, government support, acquisitions, and growth mechanisms. Covered ratio spread overview and step-by-step trading process. The covered ratio spread is a bullish to neutral options strategy typically used to repair or enhance a long stock position, especially if the stock is underwater, trading below your purchase price. It involves moving the underlying stock while selling more calls than you buy, but with the stock covering part of the position to limit risk. This can lower your break-even point and generate income via net credits, making it suitable for aiming at minimum profit scenarios where the stock rises moderately without exceeding the short call strike. Key characteristics: outlook moderately bullish, profit from moderate rise in the stock price up to the short call strike. Risk reward: limited downside protected by owning the stock, but unlimited upside risk beyond the long call strike if the stock surges due to the extra short call. Often established for a net credit providing immediately minimum profit if the options expire worthless. When to use: on growth stocks you own long term to generate income or recover from decline without selling the shares. Example: set up for 100 shares of stock, sell 2 calls at a strike A near at the money, buy 1 call at the strike price B out of the money higher than A. All options same expiration, typical 1 to 3 months out. Step-by-step trading process for covered ratio spread. Research and select the stocks whose as US growth stock with strong long-term potential, e.g. from tech or AI sectors. Analyze fundamentals like revenue growth, earnings forecast, and volatility. Use tools like Yahoo Finance or brokerage platforms for current data. Second, acquire the underlying shares, but at least 100 shares per contract. Ensure you have sufficient capital. This is a covered strategy, so no margin needed for the stock leg. Access market conditions. Wait for moderate bullish sentiment or after a dip if underwater. Check implied volatility lower for favor sellers like this strategy. Fourth, choose strikes the expiration. Select sharp calls at a strike where it is If assigned, where you are, okay, if assigned e.g. 5 to 10% above current price, buy a higher strike, call for protection, e.g. 5 to 10% above short strike. Aim for a net credit premium from 2 shorts call, cost of 1 long call. 5. Execute the trade in your brokerage, e.g. Think or Swim or E-Trade. Enter has a combination long 100 shares, short 2 calls plus long 1 call, confirm. Net credit, debit, target credit for minimum profit. 6. Monitor and manage stock price. If it approaches short strike, consider rolling out or closing maximum profit at short strike, break even lower by the credit received. 7. Exit, let expiries, if favorable, or close early for profit. If assigned and short calls, you delivered shares but keep the credit at long call. 8. Risk management, set stop loss on the stock. This is not for beginners. Use paper trading first. Commissions and taxes apply. This strategy, minimum profit comes from the net credit, e.g. $200 credit on a $10,000 position, equal 2% immediate yield if options expire worthless, with potential for more if the stock rises moderately. 5th, growth stocks. How to get minimum profit via trading, step-by-step process. Here are 5 top US growth stocks based on recent analysis, focusing on high projected revenue EPS growth for 2026, e.g. AI, tech, infrastructure. I will outline a step-by-step trading process using the covered ratio spread to aim for minimum profit via credits and break-even reduction while holding for growth. 1. Micron Technology, memory chips leader in AI data centers, projected 2026 EPS growth 50% plus. Step by step, Richard's MU's AI exposure by 100 shares, $100. If dips, sell to $105, calls buy $110 call, 1 month expiration for $2 credit, monitor, exit at $105 for minimum profit from credit moderated. Again, to Taiwan Semiconductor, that means TSM, foundry giant with US expansion, projected revenue growth 20 to 25%. Step by step analyze TSM US fabs, acquire 100 shares, $150, sell to $175, calls buy $180, call for credit, adjust if volatility spikes, aim for credit as minimum profit if flat. 3rd, Microsoft, MSFT, could AI powerhouse, projected EPS growth 15 to 20%. Step by step review Azuri, growth by 100 shares, $400, post earning dip, sell to $410, calls buy $420, call hold for dividend plus credit minimum profit. 4th, Alphabet, GOOG. AI church leader projected revenue growth 12 to 15%. Step by step process. Check Gemini AI update. Purchase 100 shares. $150 sell to $155 calls buy one $160 call use rate for minimum profit in neutral markets. Fifth, Amazon e-commerce cloud growth projected EPS growth 25% plus step by step. Evaluate AWS buy 100 shares $180 sell to $185 calls buy $190 call after pullback rate provides minimum profit buffer. These process target minimum profit through options create 1 to 3% yield while positioning for stock upside. Fifth, growth equity stocks. How to get profit, strong fundamentals, government support, acquisitions and growth mechanism. Focusing on US listed growth equity stock, public companies with equity-like growth profiles. Here are 5 with high 2025 potential. I will explain profit strategy, e.g. buy and hold with options overlay. Their strong fundamentals, e.g. revenue, EBITDA growth, government support, e.g. CHIPS Act funding, recent acquisitions and how they grow. 1. NVDA, AI chip dominance, profit strategy. Buy shares, sell covered calls for income 5 to 10% annual yield, aim for 20 to 30% annual returns via appreciation. Fundamentals 100% plus revenue growth, 50% margins, government support, indirect via AI defense contracts, CHIPS incentives, acquisitions. Mellanox 2020 Cumulus network growth expands via data center, AI demand, new GPU architectures, software ecosystems. Second, Intel INTC Semiconductor revival profit strategy, hold long-term use covered ratio spread for credits 2 to 5% minimum yield, target 15 to 25% returns from recovery. Fundamentals, rebounding EPS 20% growth forecast, strong balance sheet, government support, 10% US government stake via $8.9 billion CHIPS funding, acquisitions, Habana Labs, that is AI, Tower Semiconductor pursuit, growth builds US foundries, AI shifts to fabless model for efficiency. Third, advanced micro device, AMD, CPU or GPU competitor. Profit strategy, trade breakouts, add puts for protection, 20% plus returns from AI uptake. Fundamentals, 15 to 20% revenue growth, improving profitability, government support, CHIPS Act grants for US fabs, acquisitions, G-Linux 2022 for EPGAS, growth leverages, AI accelerators, partnership, e.g. Microsoft expands in service or PCs. Fourth, Lam Research, LRCX chip equipment maker, profit strategy, buy on dips, dividend, Reinvest 1.2% to yield 15 to 20% returns from sector tailwind fundamentals, 16% EPS growth, high ROE, government support, benefits from chips funded expenses, acquisitions, KLA-Tencor pursuit, smaller tech buys, growth rides, semiconductor capex boom, innovates, etching deposition tools for advanced nodes. Fifth, Eli Lilly, that means LLY short form. Pharma growth via weight loss drugs. Profit strategy long position with callers. For protection 20 to 25% returns from pipeline fundamentals. 40% plus EPS growth due robust cash flow, government support, FDA approvals, NIH partnership acquisitions. Point Biopharma 2023 DICE Therapeutics growth scales. Mounjaro Zepbound invest in oncology, Alzheimer's, global expansion. These stocks profit via appreciate hold 1 to 3 years plus income strategies with government backing, reducing risk. Please like, subscribe and comment. Another video is there, that is 1.5 minute, that is also trading purpose. You will see, you will hot touch video.
The covered ratio spread trading strategy involves holding a long position in a stock while selling more call options than the shares owned. This approach aims to generate additional income from option premiums with the potential for profit if the stock price rises within a targeted range. Investors start by selecting a stock, selling extra call options, choosing appropriate strike prices and expiration dates, and actively monitoring their positions to manage risk. To achieve minimum profit in the USA, it is important to set clear financial goals, opt for conservative investments such as government bonds or blue-chip stocks, and regularly track portfolio performance. Adjusting strategies as market conditions change helps maintain steady progress toward profit objectives. Palantir Technologies, Broadcom Incorporated, Crystal Biotech, Lockheed Martin, and NVIDIA Corporation stand out as leading growth equity stocks in the USA. Each company has demonstrated robust fundamentals with consistent revenue increases and strategic investments. Government support has played a pivotal role, particularly for Palantir and Lockheed Martin, ensuring stable contracts and funding. Recent acquisitions, such as Broadcom's purchase of VMware, have expanded their market reach and product offerings. By leveraging innovation, strong partnerships, and targeted expansion, these companies have achieved sustained growth and profitability in their respective industries. Over the past year, Micron Technology
And another is mine. Please like, share and subscribe. And creators, Google Ads, subscribe plus grow your ads. Now I am introduce myself one updated programs and picked excellent just for you. Discovered our exclusive collection at www.noblestoreshop. We have parented with Amazon to bring you top tier products with the convenient and speed you trust. When you shop through our curated links, you support our work through a small commission from Amazon at no extra cost to you. It is a simple way to shop smart while supporting our community. Quality meets convenience. Click below to explore your next favorite find. Shop our Amazon favorites now. Thank you for your cooperation and coordination, and we will meet next video. Thank you once again.